Hi everyone, and today we are going to read and understand about Dixon, that what are they currently doing, how was their Q1FY26 result, and along with that, what has the management given the guidance for the coming future. So there are some good and interesting data points about the company, so I would suggest you to watch the whole video. And just a quick disclaimer that it's not a buy or sell recommendation. So first, let's start and understand what Dixon does. So Dixon is a EMS company and they have created a moat in the mobile manufacturing in India, and along with that they have some marquee relationships with the customers like the Samsung, Motorola, Vivo, Xiaomi and Nokia, and also they have a very good presence in the domestic and the exports market. Then along with the mobile manufacturing segment, they have different segments like the electronics, lighting, then home appliance, then they also have CCTV segment. And currently mobile manufacturing is the biggest driver of the overall growth in the company. And along with that, they have a continued demand from Xiaomi, Longcheer and the Vivo company. Now let's take a look at their current shareholding pattern. So promoters are currently holding almost 29%, then FIs are 20.5%, then DIs hold 26.6% in the Dixon, where there are multiple mutual funds like the Motilal Oswal, then HDFC, then LIC, and lastly the public holding is 23.8%, where one of the biggest investor is the Kamla Vachani. And now let's come to the next segment, which is the industry overview. So here we can see that there are three segments. The first one is the Indian electronic market, the second one is the domestic manufacturing, and the last one is the Indian EMS market. And if we take a look at the Indian EMS market, which currently stands at 4 trillion and consists of 31% of manufacturing, that is expected to grow at a 32% CAGR till FY30, and it is expected that the Indian EMS market is going to reach around 15 trillion, where it will consist of 41% of manufacturing. And even if we take a look at the domestic manufacturing and the Indian electronics market, so that is expected to grow at a 25% CAGR and Indian electronic market at a 22% CAGR. So from this data point, we definitely got to know that this industry is growing at a very fast pace. Now let's take a look at some other players in the Indian electronic market. So here we can see that there are multiple players like Dixon, Amber, Keynes, Sirma, but one of the problem is that Dixon can't be compared with all the players. It's because they have a huge concentration in the mobile phones, and here if we take a look, so it's only the IT hardware and the CEA, which means the consumer electronic and the appliance segment. So here Dixon, Amber and Sirma, we can compare these three companies only in this segment. And now let's come to the next part, where we will see the revenue segment in Dixon. So here we can see there are four revenue segments. The first one is the mobile phones, which consist of 91% of their revenue, which was 85% in the last quarter. So here we can see the growth in the concentration in the mobile phone revenue segment. Then if we take a look at the consumer electronics segment, that is currently 5%, and the lighting and home appliance, it consists of 2%. And next, if we take a look at the segment wise EBIT margins, if we take a look at the mobile phone margins, so that is around 3.5 to 3.8%, whereas the home appliance, which is a very small part of the revenue segment, it is more than 10%. And lastly, if we take a look at their other two segments, which is the consumer electronics and the lighting segment, so that comes to almost the same margins, which is around 6%. Now let's come to the next segment, where we will do the financial analysis part. So let's take a look at their income statement. So in FY25, they gave a revenue of 38,860 crores, and that is expected to grow to 78,600 crores in FY27. So it is expected that they are going to double their revenue in the next 2 years. And next, if we take a look at their EBITDA, which is currently 1,500 crores, so that is expected to be around 3,144 crores. So again, here we can see that it's going to double in the next 2 years. And if we take a look at their EBIT, which is currently 1,226 crores, that number is expected to be around 2,750 crores. And lastly, if we take a look at their PAT, which is 1,095 crores, and this number is slightly different compared to what it is in the screener. And here it is expected that in FY27, the PAT is going to be around 1,800 crores. So after looking at this forecasting, we can definitely say that the company is expected to grow at a very faster rate. And now let's take a look at the different type of margins and what are the future projections. So here we can see that Currently their gross profit margin is 7.8% in FY25, and that number is expected to grow at 8.3% in FY27. If we take a look at their EBITDA margins, which is currently 3.9%, that is expected to almost be the same, around 4% in FY27. Next, if we take a look at their EBIT margins, which is currently 3.2%, that is expected to be around 3.5% in FY27. And lastly, if we take a look at their net profit margins, which is currently 2.8%, that number is expected to be around 2.3%. So here we can see there is a slight drop in the net profit margins, and the reason is the increase in the tax rate in the next 2 years, which is currently 21.7%, and in FY27 that number is expected to be around 25.2%. So this number is not fixed, so it can change in the coming future, but as of now this is the forecast. And now let's come to the next segment, where we will do the peer comparison of Dixon with other companies. So I have compared Dixon with Keynes and Syrma, and because we saw a data point earlier where it correlates with the consumer electronics and the IT hardware segment, let's take a look at their market cap. So Dixon has a market cap of 1 lakh crores, whereas of Keynes it's 40,700 crores, and for Syrma it's only 12,800 crores. So here Dixon is obviously a bigger player. Then even if we take a look at the ROCE, so Dixon has almost 40% of ROCE, whereas for Keynes it's 14.4%, and for Syrma it's only 12%. And even if we take a look at the ROE, so Dixon currently has almost 33% of ROE, whereas for Keynes it's 11%, and lastly for Syrma it's 10%. So ROCE and ROE wise, obviously Dixon is a clear winner over here. And if we take a look at the CFO by EBITDA, so Dixon has 66%, whereas for Keynes it's negative 18%, and for Syrma it's 51%. Next, if we take a look at the debt to equity ratio, so it's almost similar, where for Dixon it's 22%, for Keynes it's 32%, and for Syrma it's 38%. And if we look at their PEG ratios, so Dixon has 1.95, which is higher than 1.5, whereas for Keynes it's 1.4, and for Syrma it's 1.38. So we can say that Dixon is lagging over here. And lastly, if we look at their PE ratio, so Dixon has 116 of PE, whereas for Keynes it's 128, and for Syrma it's 63.4. So I think Dixon and Keynes are always going to trade at a very higher valuation, because the industry is itself growing at a very faster pace. And now let's come to the next segment, and we will take a look at their current con call details and the guidance they have given. So first, in the mobile and EMS business, so Dixon has a target of producing 40 to 42 million units and 62 million units by FY27, and out of all the 62 million units, they're expecting around 18 to 20 million from the Vivo phones. And currently in Vivo, they have a 22% share in the Indian market. Next, they have talked about Motorola, where they have tied up with other EMS players, which is a negative sign for the Dixon, but even after that, they cater to 80% of Motorola requirement. And lastly, their currently mobile export stood at 16 billion in FY25, which will increase to 70 billion in FY26 and 110 billion by FY27. So that is an exponential growth they're expecting in the mobile business in the coming future. Next, if you look at the consumer electronics segment, so currently in the refrigerators, they hold 10% market share in the direct cool category, and for FY26, their target is to grow 15% growth YOY, and they have a revenue potential of around 25 billion in the next couple of years. Next, in the LED TV segment, the Q2 FY26 outlook is strong because they have a good order book, and along with that, they are targeting to make 8 lakh units in Q2. And lastly, in the home appliance part, they have partnered with Eureka Forbes, where they manufacture robo vacuum cleaners, and currently they have a revenue of 12 billion in this segment, and it's expected to grow at almost 18 to 20 billion. And now, if you look at the recent partnerships they have done, so recently Dixon has acquired Kunshan Q-Tech, which is a leading global manufacturer of camera and fingerprint modules for smartphones, and they are among the top 5 global manufacturer of the camera module. And along with that, they have also acquired a 51% stake in the Vivo company. Next, they have also made a JV of 74-26% with Longcheer, which is a global player in the mobile and the IoT products. Then the management has mentioned that they currently have no plan in the PCBA manufacturing in the semiconductor segment, but they are expecting to aggressively invest in the coming future. And lastly, they are going to do a capex of 1200 crores, and out of that 750 to 800 crores are going to get into the camera and display module. Now, after reading all the good data points of Dixon, let's come to the risk in the company and in the industry. So the first and the major risk in Dixon is that they have a concentrated revenue from Motorola, and Motorola has diversified their requirement from Dixon to carbon. Then the second risk in the company is the loss of client base, which we can see in the Motorola part. The third risk is the slower than expected growth in the mobile segment. And lastly, if there is any headwinds in the non-mobile business, so that can also impact the revenue and the future guidance. And now let's come to the last segment where we will do the technical analysis. So in March 2023, it was trading at a price of 3000 rupees, and just take a look at their growth. So from 3000 rupees, it has made an all-time high of almost 19,000 rupees, and now currently it's trading at a price of 16,600 rupees. So that is a growth of more than 5x in the last 2 years. And after making an all-time high of 19,000 rupees, so currently it's consolidating in a range, and one of the main reason is because they were trading at a very higher valuation, but after that they have been giving good quarterly results, and it's expected that they're going to continue this good momentum in the coming future. So what do you guys think? How is Dixon going to do in the coming future? Write down your opinions in the comment section. So thank you for watching this video, and see you in the next video.